All right, thank you for coming. In today's session, we will go over the bearish chart setup I prepared. These are the stocks which I expect to decline further. They are already declining, but then I expect them to decline further. So before um, let me tell you about the agenda. So today's agenda, I'll show you some steps which I take in every trade I take. So there are certain steps which I go through. I'll show you what steps I take. So, uh, I mean, you can note down these steps or you can adopt these steps in your trading. And then I'll show you about 15 to 20 charts on the stocks which are setting up for further decline. And I'll give you the reason why I think like that. And then I'll show you some market charts at the end. So I expect market to drop further, S&P towards 2600, 2585, something like that. So I'll show you the charts. Anyway, so let's begin. So these are the steps. There are a lot of steps. There are more than these steps, but I'm showing you the most important one. So just for me, this is my belief. These are the important steps, and every day I need to take and follow these steps when I take the trade. So I try to keep these steps in my mind before I start or before I take any trade or during the trade. So the first one is to understand the market conditions. If we don't understand what the market is telling us or what the market is doing right now or the market is expected to do just in the very near future, like tomorrow or today, in an hour or two, then we may be, it depends what kind of a trading horizon we have. So I'm talking about from the swing point of view. But right now for the position trading or even you can say if you have a little longer duration, the market is in bearish mode, in a downtrend mode, not in a bearish mode, but in a downtrend mode. So it all depends what is your objective. So the market is in downtrend since last week of September, and especially from 3rd of October. So understanding the market is volatile. Every day we see up and down move. So understanding the market conditions is very important before we think about taking the trade. So if I believe that the market is expected to go down further, then I will prepare my watch list accordingly. So I'll prepare the stocks which are setting up to go down further or about to collapse. If I believe the market is expected to move up, then I'll prepare my watch list for the stocks to move up. But sometimes I would prepare both watch lists, up and down, because the market is volatile. So one day it goes up 500, another day it comes down 300. So, so it all depends. But overall, the trend is right now, if you look for the swing point of view or even the midterm, the market is in a downtrend. So I prepared my watch list this weekend for short setup. Now I don't know what will happen tomorrow. I have no idea. I have open positions. So I don't know what the market will do. But right now I look at the futures and the future market is down. So I prepared the list. Now this watch list is just a watch list. It's my stocks list according to my criteria. It may not fit your criteria at all, and it will all the stocks when you look at it, it may look at you and it may sound useless. You may say, "What kind of list is this? It's all useless crap." But for me, they are the stocks which I will watch tomorrow. So they are not crap for me. Maybe crap for you. So it all depends how we see things, right? So tomorrow, so let's say I have about 40 to 50 stocks on my watch list. So when the market open, I will start watching. I have further filter, so I put the filters there for me to further narrow down my list from 40, 50 to maybe 10. So out of 10, then I will start, suppose, stocking two trades. So I will like two trades which are setting up. So I would stock those two stocks to trade. I would say, okay, these look good to me, and I will watch it. I will stock these two stocks very closely to see what they are doing, whether they are behaving according to my criteria. So the next step would be out of the two, the or both of them, or maybe one of them, or maybe none, or maybe something else. I would find a familiar setup which I have seen it before. So um, the setup will trigger in my mind that, hey, this is the setup, I have seen it before and it works. And when this happens, the stock goes down this much. And if I'm wrong, I will be wrong at this price level. So my mind will like a scan. So when I'm looking at the stocks, my mind will look at that the stocks, the chart, and then it will go through the scanning process. So it's like matching up the images in my brain. So since I've seen so many charts, so it will look familiar. So I'll say, yeah, this one is familiar. This is the way. When this happens, this will happen next. So I can visualize the path the stock will take. So I can say the stock is doing this, and next step is this, and this, and finally I will cover my suppose my short at this level. So at that time, I will start evaluating my risk to reward ratio. So how much I'm going to risk? That's the first question. If I'm wrong, how much I'm going to lose money? And then if I'm right, how much I'm going to make money. So at least 1 to 2 ratio, or ideally experts say I need to have 1 to 3. So let's say 1 to 2. So I would evaluate my risk is $2 or $3 in shorting that stock. I would make $6. And then the next step would be that the way the setup is that I will feel good about it. I will not be excited. It's not nothing to do with excitement, but I will feel good inside that this is the setup. I have seen it before. It works. This has a good risk to reward ratio, and I'm feeling good about it. And I must take the trade. So at that time, I will pull the trigger. So there is no hesitancy whether to pull the trigger or not to trigger. Should I wait further? Because if I wait further, the stock may just move further down, and then I will miss it. So I will do some checking like earnings. There's another separate checklist before pulling the trigger. There's a checklist, right? So I'll go through the checklist. One of the things is to look at the earning. So look at the earning. Earning is not tomorrow or in the evening after hours that I go short and then it goes to the moon and I'm clobbered. So that would be my mistake. So I'll just look at that and other checklists, and then I will pull the trigger. As soon as I pull the trigger, then my next step would be the exit strategy. I must have exit strategy. If I don't, then I'm fooling myself. That's what from time to time you will people I read posts on Facebook or I entered this trade, I don't know where to exit. Can you please tell me? Or blah blah blah. So that's just newbie thing. So set exit strategies. So immediately I would set the bracket order for the to cover at loss or to cover at profit. So my profit could be I could have a multiple strategy. I could be taking profit as the stock moves down, or I may take the profit at once at one set price, or I may have an exit strategy based on the percentage profit, based on the dollar profit, based on the stock target, based on some event occurring, based on market hitting some support level for a short position. based on time. So there are various exit strategies. So it depends. Then I will employ that strategy and the stop and let it go. And then all I have to do is just monitor the trade and see what it's doing. I may have to adjust the trade. I may scale in. I may scale out. If the trade is working in my favor and I see that I can lower the stop, I can add to that position. So if I can lower the stop, I can add more to the position, so I can pyramid into that trade. I may have to scale out. I may think that instead of adding more, I have to scale out. So if I'm short 100 shares, I may have to short just cover 50 and leave 50. So I take profit or loss, whatever it is. I don't regret when I take profit or loss. So no regret when taking loss, no regret or not getting excited when taking profit. It's like a normal thing. Because if I'm taking a loss, I have defined my risk at this step when I evaluated my risk. So I know how much I'm going to lose in this trade unless there is some unexpected event occur and I may lose 10 times or 5 times more than what I planned. So that's okay too, because I plan to take suppose $1,000 loss, but unexpected event occur such as some unexpected news came overnight and the stock just gapped up. I was short and the stock gapped up, and instead of $1,000 loss, now I have a $5,000 loss. So that is unexpected loss, so it's okay. But when the stock hits the stop, I take my loss, and when it hits the target, I take my profit. So either I take profit or take loss. So whatever the condition is met here, I pat my back for following my rules. So another thing is that we need to have a rule. If this occurs, then this. If this, then this. So the rules are being followed at every step of the way. So when I'm stopping the trade, I'm looking at the rules. When I'm finding the familiar setup, there are rules triggering what rules I need to go through. When I'm visualizing the path, I know the rules. Okay, this is the way the stock will go, and these are the rules. When I'm evaluating risk to reward ratio, I have set up the rules. When I pull the trigger, I have a rule at what chart, what the stock is doing, what time frame I should be pulling the trigger. When I exit the strategies, I setting the exit strategies, I have rules. When I take a profit loss, I took it based on my rules. So everything I followed based on the rules. If still I lose, it's okay. But I should be overall in the long run, the way my system set up should give me positive results. Then at the end, when the day is over, I update my trading journal. So I say I shorted 100 stock, 100 shares of this. This is the position open at this price, or I covered at this price. I made this much money, or I lost this much money. Then I take care of the mistakes. So I write down my mistakes in the journal. So this is also another crucial step. So if I forgot to look at the earning and the stock gapped up 10 points, that was my mistake. So I need to write down the mistake that I forgot to look at the earning and I lost $1,000 on those, or whatever the risk I define here. So mistake journal is updated, and at the end, I give thanks to God, even if I lost or I make money. So this is the last step. So these are the steps you need to follow, or I follow. So it's all up to you. And there are other steps before and after. Before is that you need to understand what the market is doing before pre-market, what your stocks are doing. Mentally, are you prepared to trade? You're not sick. You don't have any emergency conditions, etc. So, so those are the steps before even the market opens. All right. So I went through these steps. Now I will show you some charts, which I think that they have a chances of going down further. So this is my thinking, my belief that these stocks have a chances of going down. So what would happen is tomorrow When the market opens, I may catch one of these, which I'm going to show you, or I may not catch any one of them. I may miss all of them together. I may find something else. You may catch one or two, you may miss everything because it doesn't fit your criteria. So my criteria, your criteria is different. Your objective, my objective is different. My trading horizon, your trading horizon, different. My portfolio size, your portfolio size, different. So my trading style, your trading style, different. So we are two different people. So you have your own rules, I have my own rules, but I'm just showing you what I am seeing. So this is stock APMD. So it has been coming down from 450 level. It's right now at 362. So I'm showing you this upward sloping trend line. Now, upward sloping trend line is considered as a support level. So the stock is expected to hold the level at the upward sloping trend line. That's what it meant to be. But it's just a blue line. It's just a blue line drew on the chart. It has nobody is telling me the stock doesn't know that I drew this blue line. If you have not seen this chart, you wouldn't know that I drew this line. It's just my line. So I expected the stock to stop right here at 400 level or this 390 level, but it did not. So it broke. So it broke and it's standing at 362. So, and below is 200-day moving average. So now it's my belief that the stock could drop to 200-day moving average. So there is about 20 point further down move. It may stop right here because this is another support right here at in August, about 340. It's the same level, 345. So it's almost same as 200-day moving average. So if I can catch it tomorrow, I'll catch and see if I can buy puts or short the stock. So that's my belief that the stock would drop to 200-day moving average, and I have about 18 points in it. Next one is ADSK. So it's the same thing. The blue line, the support horizontal support line. So it was my belief that the stock would hold this support, but it did not. At 140 level, it crashed and it bounced back at 200-day moving average. So I believe that the stock holds the 200-day moving average. So it did magically, and it bounced up and it tested this. The support, this was the support, this blue line at 140. When the support is broken, it becomes a resistance automatically. So that's the psychology behind it, the technical analysis, the principles. When the support is broken, it turns into resistance, and there is a psychology behind it. There is a whole phenomena. So this now, when I know that the support is broken, it's a resistance, and that's what it did. It broke. So I expect that 200-day moving average. So I drew another line here, support. This is upward sloping line. It's around 130. So what I expect that this time, if the market is going down, this time it will break the 200-day moving average. It has already tested, and it's coming down again. So if it breaks the 200-day moving average, then I don't know where it will stop. Who knows, it will stop maybe here at 105 level or at 115 level. So I would see where the stock will stop. Maybe it will stop here at 121, 122 level. So it's trading at 133. So if it breaks this 200-day moving average, the ocean is the limit. Oh, I'm sorry. Okay. So I don't know what it will do, but my expectation is that this time, second time around, this 200-day moving average will be broken and ADSK will collapse. There is this is a support, 121 support, then I see 113 support, and then finally there's a big support here around 100, 103 level. So we'll find out in a few days what ADSK does. So it's I expect it goes down. Now ATVI. So the gaming stocks were going down on Friday. ATVI, Electronic Arts, Take Two. So these three big stocks. So ATVI, I think announced good earning, but it collapsed. So my belief is that when it broke the upward sloping trend line, it broke the support. So when it broke the support, it means it can go down further. So what is stopping it from not to go down further? So the trajectory is to the downside. So I put it on my radar list. It doesn't mean that tomorrow it's immediately the stock has to go down right at the open. These are just on my watch list. It can go up back to this trend line and then um, fool around here, fail, and then reverses. So I would prefer that it goes up a little bit towards 71 level and then reverses down. So I would see what it does, but I'm aware of that this 68 level, 68 plus, this level is the support. So I need to be aware of it, that this is the support level, because from here the stock has moved up significantly. It has reversed. So this is a major turning point at 68 level. So if I'm going short, I need to be aware of this level, 68 level. The next is Boeing. So Boeing was doing so good as if it will go to the moon, and it touched to 395 and then it collapsed. So now, again, it's my belief that this is a support line, right? Blue horizontal line, and then the 50-day moving average, it broke it. So what it is stopping Boeing to not go down further. It can go down to 345, which is a 200-day moving average. And if 200-day moving average is broken, then there's another level at 340, and it's trading at 356 on Friday. So from 356 to 345, about 6 and 5, 11 points. So 11-point potential. So if I out of 11, if I can catch half of it, like 5 points, I can make money with the puts. So now my job is to go through the steps, these steps, next few days, these few steps. So I'm at this stage. I prepared my watch list. I'm stocking the trade. Tomorrow or day after tomorrow, I'll see what Boeing is doing, find the familiar setup, and visualize the path. I already know the path, right? So I already know that it's going to 200. So I will visualize it. I will evaluate the risk reward. I need to feel good about it. It needs to be going down with some good volume, and then I'll pull the trigger, and then I'll set my exit strategy. So I know the path. So I already defined my path for Boeing to go towards 345, and it should not move up above this trend line, and I'll pull the trigger. Now, Best Buy. Today I went to Best Buy and bought another monitor, but it doesn't mean the stock is going up tomorrow. So the Best Buy. So this one again broke the support line, and it's just sitting at support at 70. So if the Best Buy broke or starts to move down, then I see this support, which is made in June at 67, some 67 levels. So it's closed around 71, and if it has a support at 67, so 4 points potential for a $71 stock. So it may give me some good money in the puts. So I'll keep an eye on Best Buy next few days and see if we can catch it towards 67. So I have already visualized the path that I'm going to take. It is expected to take. It may not take it. It's up to the stock. Now BDX, again this one. So it broke this support line, upwards trending support line, and 200-day moving average is just around the corner, so 3 points away. So it may stop here. So a lot of stocks have already collapsed. So they have But it doesn't mean the stock will not go down. They can just keep going down below 200-day moving average. So this 200-day moving average does not mean anything for the stock. These are just moving averages. So they act as support temporarily, and then if they want to go down, the stock goes down. So 50-day, 200-day, um, it's just a moving average. So if it breaks the 200-day moving average, so I don't see support till here, which is around 228. So this is the support where from where the stock made its upward move. And then there's another one at 219, where the stock 220, from where the stock made its upward move. So if it breaks 235, then even 220 is possible, or 229 is possible. So 6 points here, 235, 15 points here. So 15 points here, six. If it comes down to here, 6 points. So there is a potential if it breaks down. So it's just on my radar. Next one is Baidu. So Baidu, if you draw this line upwards, down, this is downward sloping trend line. So the Baidu bounced exactly from the downward sloping trend line. If we draw this from this candle, which is piercing pattern, and this candle, which is another piercing pattern, which is a powerful bullish candle pattern. So it bounced and it gapped up next day. So this was good, but then it failed and it gapped down. So it filled the gap and it gapped down 18th of October. So this is 18th of October around 11 a.m. Pacific chart. So I expect Baidu to come down to this line low and make a new low. So make a new low here. And what if it breaks this trend line? This is just a blue line. So it doesn't mean anything. It can break. So so there's no guarantee that it will hold. And if it breaks, then I could make a lot of money on the puts. Whereas if it holds and reverse sharply, I'll just exit. So this is just a blue line. To me, just an indication that it may stop. So no more, no less. So right now it's just sitting at 192 level. So let's see what happens tomorrow. Now this one, Boston Scientific, BSX. So it's trading in the channel right now. So this is a channel. So channel means the stock touches the upward channel and then comes down and then it bounces back up and then it goes to the upward line, touches there and then comes down. So the stock does the ping pong thing. But again, this is just a blue line. What if it breaks this blue line? It has been doing it. It's trending on the. If I see the channel, is like a perfect channel, like a canal. Somebody drew it with the scale, but it doesn't mean that it will not break. After all, the channels are broken. So what if it breaks this channel tomorrow or the day after tomorrow? Then what would happen? Where it can fall? It can fall at this level, which is 32. This big white candle, this is a big support here. So I see this is a big support. So it can fall to 32, or it can just fall the 200-day moving average, 31.38. So it's sitting at 36.54, 31.38, 5 points. So that's a big target. So what my eyes see may not, the stock may not do, which is may not hold the support. It may break. So if it breaks, I'm ready to go short. So I'm just preparing my watch list. Again, the same thing, Blackstone, BX. So you see BX is sitting at the upward sloping trend line. So this is just a blue line to support. It may break it. And if it breaks, it doesn't have much potential. So this one has less potential. 200 days very close, but I'll just watch it. It's just on my watch list. This one, CLVS. So CLVS is sitting at the downward sloping trend line. So it's at the support from where it bounced back. So downward sloping trend line is less meaningful when it comes to support than upward sloping trend line. So it's just a blue line, and CLVS is just sitting at the support level. So what if it breaks tomorrow? What would happen? So I should be ready for CLVS to go down. So I'm just putting it on my watch list. All right. This one is CRM. So CRM has been going down. So all stocks go up and then they come down. So this is another upward sloping trend line. It's supposed to be stronger support line than downward sloping. So it's sitting at the support line idea, like magic. So magically it's sitting at the blue support line. But what if it breaks? So it's sitting at 140.50 and the 200-day moving average is 132. So 8 points. So what if it breaks this support line? It can drop to 132. So 8-point profit. So it can happen. So if I can catch it, look at this CTXS. This is another upward sloping trend line. It broke it, and it broke very clearly, cleanly, and it broke the 200-day moving average. So the 200-day moving average is just an average. So it doesn't mean that the stock will not break. So you see, it broke, and now the stock is in the bearish territory, and I see there's a gap here, so it can come down to fill the gap. I see this is a support at 95. It's sitting at 101, so 95 support, 6 points, and here at 90 support is like 11 points. So CRM can crash through and go to 90, and who knows, goes to 85. This is where it started. So from 101 to 85 possibility, 16 points, CRM can come down. So all I need to do is watch CRM for next few days and see what it does and if I can catch it. And not CRM, this is CTXS, sorry. So CTXS, and I see what, if I can catch it. If I can catch it, it's a great profit to be made. Another one, Electronic Arts. So ATVI, I showed you the chart of ATVI. This is Electronic Arts. So gaming stocks are just crashing down. You see, this was a bearish signal at 150 and now it's trading at 102. So it crashed and is at 102 level. So it broke the downward sloping trend line. It may continue going down. If the market comes down, this will also come down. So bearish, very bearish candle right here. So I'm just putting it on my watch list, what it will do if I can catch it. EOG. So we traded EOG. I'm showing you the chart, my thought process. So this is a candle. When I look at it, this is a highly bearish candle, and it was coming down, but I had other trades, so I did not take it. Next day, it gapped down. So when it gapped down, I said, okay, I need to take this trade. I missed it already. I'm 1 day behind. So I was supposed to take the short right here somewhere, and I missed it. But next day when it gapped down, so now the path. So I'm visualizing the path. And so in my mind, the chart scanning is running, and I see, okay, when the stock has this kind of pattern where big, tall, white, red candle, and the next day this itself is bearish, and on top of that, it gapped down. So what is the path? So I visualize the path, and it's clear that it can come down to 117. It can come down between 117 and 115. So what are the odds? Go short. So this is what happened to EOG. So it tried to hold 50-day moving average. This is just a moving average, nothing more, nothing less. And it crashed to 117. So as visualized. So the trade was triggered here, and as visualized, it came down here. Okay. This one, Facebook. So Facebook has a strong support at 150 level. So based on this kind of 149, 150 is a strong support. Again, this is a support. So Facebook It's at 154. So there is a 4-point potential, not much, but 4-point potential. But what if this long-term potential or the support is broken? Then what will happen? All hell will break loose, right? So this is a hammer. We went long on this hammer, long time if you remember. We went long, we went short here on FB on earning. This is earning collapse. So we had puts here. One member made 68,000 on his puts. So this was a earning. This was the news, negative news coming about the breach of the breach news. So then it made a hammer. So this is a strong support, no doubt. So 150, 149 is a strong support. So everybody knows that the 149, 150 is a strong support. So the stock will react based on everybody knows that. They are all watching. But what if the stock doesn't hold this 149, 150? Then what will happen? So it's just a blue line right here. I mean, there are buyers here, but it can break. So if it breaks, then what will happen to Facebook? So need to watch. HFC, I don't trade HFC, but I saw this chart, so I prepared it. I look at it on Friday for the options, and the spreads were so huge. So I even eliminated this stock from my watch list, but before I eliminated, I prepared the chart because I don't think I'll trade options on this. It doesn't have good option. So it broke the support line. It's a blue support line which I drew. So this is just a blue line and it broke. So right now it's sitting at 200-day moving average at 62 level. So what if it breaks 200-day moving average? Then what will happen? I don't see any support here on the left all the way to 43, 44 level. So it would be a great shot. I don't see any support. It went up like crazy from 43 all the way to 83. So 40-point move, and now it's sitting at 63. So the way it went up, it can come down the same way. So just on the watch list. IBM, we traded IBM. So it gave down on earnings. So this is earning 2 days ago on 17th of October. So I was watching it. So when the earning announced and IBM collapsed, so initial reaction is they are buyers and they're sellers, they're buyers and sellers, and then it's just moving in a certain tight range. So it's not evident here on this daily chart. So this is a daily chart. So if you look at this daily chart, you don't see anything. You just see a big gap down. But if you're watching a 5-minute chart or a 15-minute chart, then you see the range. So you need to flip. When this happens, you need to flip your chart to 5 minutes and 15 and then see the reaction of the stock, what it's doing. So I follow opening range breakout strategy, which I teach. I've taught many times in the webinars. So one of these days, if you don't know what is opening range breakout, so I was applying the opening range breakout strategy on IBM. So I was watching it. I knew the low for the IBM and I knew the high. So high was far. It was trading near the low. So during the last 15-20 minutes, it broke the low of the day. So at that time, I sent the alert to buy puts. I shorted IBM and I bought the puts. And this is what happened. It broke. So the point is, if the stock gets down, the initial reaction is they start buying. Somebody starts buying. They think it's a good buy, and then somebody is selling. And by the end of the day, the stock will tell you where it's going. So the buyers give up. There are more sellers. So that's what happened in IBM, and it collapsed. Now this one, Triple L. So L3 Technologies. So this is a great shot. It gapped up big time. You see the big time gap up, and then it just made the high. It reached its peak, and now it's coming down. So it's coming down. So I'm watching it for short, and it would be a great shot. So I know I visualize the path. I know my exits. My exit will be above this 221 somewhere here. I visualize the path, compare the reward. Reward is huge. It can come down to fill the gap, 198. So risk to reward is huge on triple L. I will feel really good about it if I can catch it Monday or Tuesday. So I will feel very good. So this is the kind of stock you feel good when you short it. You know the risk, you know the reward. I will feel very good about Lulu if I can catch it on Monday, Tuesday, Wednesday, Thursday, Friday, whenever. As I see it's coming down and about to break this blue line support. So this looks like this is a downward sloping trend line. So this is just a support. The blue line it has no meaning. It's just a blue line. So it doesn't mean a thing. The stock for a stock, it can come down, and it can come down to where? It can come down to 130. So I'm visualizing the path. I'm saying, okay, where it can come down? Oh, it can come down to 130. What if it breaks 130? Where it will come down? Oh, it can come down to 120, this level. Okay, so where else it can go down? Oh, it can go down to 111, 112 because of the 200-day moving average. And it will fill the gap at around 105, 104 level. So this is the path Lululemon can take, and I will really feel good about it when if I can catch it. So this would be a great setup, Lululemon and Triple R. McDonald. So all the stocks were moving. There is always a stock which defying the gravity. So McDonald was the one on 17 which was moving up. So I went long simply because it broke this horizontal resistance line. It doesn't mean a thing, but it did. So it did. I went long on McDonald, and it has been going up since then. So I'm on a good side on McDonald. And earning this coming up. So that's another reason, the earning coming up. So if earning coming up and the stock is moving up, so Home Depot, I saw Marcelo chart is doesn't look good. I saw it. I didn't prepare the chart on Home Depot, but it looks bad. So I don't have it. I didn't prepare the chart. I don't think I prepared the chart on Home Depot. Anyway, so Momo. Now this Momo fooled me. So when I saw Momo, you see on 18th of October, 10:54 a.m. So this is what I saw in Momo. So this blue line, which is a support line, and the stock has been bouncing above the support line, but it doesn't mean anything. It can break. So that's what it broke. It broke this, and it was down like 33 cents on me. Let me see. Okay, it was down at 80 cents. When I spotted, it was down 33 cents. So I got busy with something else. So it was down only 33 cents. I said, okay, it's down only 33 cents. Um, I'm not touching it. Market was bearish and it's only down 33 cents, but boy, it crashed. You see, it broke the support line. So by the time I saw the chart, it was 80 cents down. So I said, okay, 80 cents is, I'm not too excited on a stock which is down 80 cents. So 33 cents didn't excite me, 80 cents also did not excite me. And this is what happened. So I I should have taken this, could have, I should have taken this short because my risk was too little. I could have put the stop somewhere here above the blue line, but I did not. So it was down 33 cents when I spotted it. When I prepared the chart, it was down 80 cents. And when I did not, this is what happened to traders and to me. When I didn't short it at 33 cents down, why would I short when the stock is down 80 cents? Because I'm regretting right now. So the regret takes over. So when the regret takes over, the traders, they just don't do anything instead of um, let the bygone be bygone and say, okay, what the hell, 50 cents, only 50 cents, I missed 50 cents, it's okay. So I did not take short on 33 cents down. I did not take shorts on 80 cents down. So I missed both because regret was took over here. So when the regret took over, I did not. And then I really regretted when next day on Friday I was going through and I saw it's down another 7 points. So I would have made how much money here? When I spotted it was $34 and now it's sitting at $30. So, and God knows where it can go. It can go all the way to 26, 25. So I really regret now. So this is what happens when you see the stocks, when you're stalking it and you visualize the path. The only reason I did not feel good about it. It was down only 33 cents, but I eliminated it from my stalking point of view. So I should have stocked it and I should have felt good when it was down 80 cents. So what I was doing is, I'll show you what I was doing. I was paying attention to dollar amount. I was not paying attention to the percentage amount. So that's where I was fooling myself. So it's all about the percentage, not the dollar amount, because every stock has range. So this is just $34 stock, not a $300 stock. So if it's a $300 stock, 33 cents doesn't mean anything. But if it's a $34 stock, then 33 cents means like a 1%. So even though it was down 1 cent, but 1%, but I was confused with the dollar amount. So I did not pay attention because of the percentage, and it went down at 11, it went down 2.3%. And you can see it went down further, more than 2%, like 3-4%, and then finally it crashed 7%. So 7% move here and about 3%, 2% here. So I missed 9-10% because I fooled myself with the dollar amount, and I was regretting that I didn't take short at 33 cents. Why would I take a short at 80 cents? So the point I'm trying to make is don't regret. If you miss something and you still look good, you go for it. Don't look for the dollar amount, look for the percentage. And you set your risk reward, you feel good about it, you visualize the path, and you take action. So I didn't do none of that. Same thing with NBL. I saw it, I did not take any action yet, but I put it on the watch list. So it's down 5%. So it broke the support line, which is a blue line, which means nothing. The stock can break. So it broke this support line, and it can come down to this 25 plus, like 20, either 25, or it can break towards 24, and it's at 29. So big percentage drop can happen. And then there is a gap here. You see on the left, there is a gap here. So it's on our watch list. Nike. So Nike broke this support line. Again, a blue trending support line. It means nothing. It's just a blue line. Stock reacts. So there's logical reason for stock to react at some support and some resistance. Buyers and sellers, they have a psychology. They're all watching, sitting like I'm watching, you watching, others are watching, and then they are watching for 200-day moving average, and then it hangs on here for a while, and then it collapses. So it means nothing. So if it wants to go down, it can go down. The chart pattern is telling me that Nike is coming down further. So so this is on my watch list. Nvidia. So Nvidia was on my watch list, and we went short. I sent the alert, made like $550 per contract profit. So what happened again? This is the stock broke the support blue line, and then it bounced back up, right? So it bounced back up with this white candle, and then it hung around a 200-day moving average, which acted as resistance, and then it was coming down on 18th October, on Thursday, around 11 a.m. So I sent the alert to buy puts, and I was expecting it will crash. So this again, the thing is the blue line. So the blue line is a support line, which we understand, but for a stock, the stock doesn't know that I'm drawing this blue line as a support. It will do whatever it wants to do. So it did this, and we made $550 per contract profit. So the point is, all the support and resistance mean nothing if the stock really wants to do its own thing. So it's just our own perception. This Palo Alto. So Palo Alto broke this 200-day moving average and this support here, right here. You see the support around 195, 96. So it broke the support and it broke the 200-day moving average. So when the stock breaks 200-day moving average, the big boys, they try to come and defend their position, but the stock is really bearish. You see this, all the red candles, they're all bearish. So what if, so there's a question, what if the Palo Alto breaks and it comes down? So I don't see support, I see support here around 175, but this is just my support based on the candles. It can break. I see support here around 160, 162. It can come down here. So ocean is the limit, is right here. It's just, it can just keep crashing down. Now Starbucks. So Starbucks, there was a news. Bill Ackman. So there was a news, and Bill Ackman bought like millions of shares. So this was what the Starbucks was doing. So I went long. I bought some shares, and my target was here. So there was not much potential around 59, and it did that. So it was a quick profit. Nothing more, nothing less. Now Union Pacific. So we went short. So when you see a chart like this, or any day, any time, you need to act right away. So I do this blue line, and the stock was just consolidating to the upside, up and down, up and down. It can do one of the two things. It can go up or it can go down. Till the stock does its thing, I'm not touching it. So that's what the stock did. It did its thing, it broke. It broke to the downside, it filled the gap. So what the logic says to go short, and then I visualize the path. So the path is that the temporary stop is around 50-day moving average, and then it can just fall to 141. So that's what it did. It stops at 148. So we are already out of UNP puts, but it did. So this was a short signal, big short signal right here. YY. So YY is on the short list, again watch list. So it broke this downward sloping trend line and is just sitting underneath. So I would see what it does on Friday, on Monday, Tuesday, Wednesday, Thursday, Friday, whatever it does, I'll take action. And I know that it has broken its support line. Okay. So these were the stocks which I prepared, and now I'll show you the charts of the four markets. And just to tell you what it's doing, in case you don't know, so Dow Jones on 12th of October was sitting at 200-day moving average. So it's just a reaction, right? So it's a reaction at 200-day, natural reaction at 200-day. Then on 15th of October, it starts to move down. Then it went on 16th of October, it went up like crazy, 500 plus points, 550 points, so 2% up. So this was it looked like as if the market is reversed to the upside, and indeed it did. That day a lot of stocks were giving buy signal, but then the market came down. It stopped right there. So now the 200-day moving average of 25,000 is the support, and it's just a support. It can break. 25,000 is a big fat round number, but it can break. So right now it's just sitting at 25,444. So it's a support indeed, but it can break. This S&P broke big on 10th of October, like 95 points, a big drop, 3.29%. And then it broke the 200-day moving average, and it tried to conquer back, and it just failed again. And then on 16th of October, just like Dow Jones, it went up like crazy. Okay, 59 points. But after that, it has given back everything. So it came back down. So now it's 27, 25 is the support. So it can come down. It can come down to this support, which is 2600. So this is a big support right here at 2600. So this blue line means nothing. It's just a trend line. It can easily break. And the 200-day moving average, if it's broken again, then 2600 is the next stop. Same with NASDAQ. So NASDAQ is stopped on 10th of October. It stopped at 200-day moving average. It broke. So 200-day moving average means nothing. It can break. Then it went up. Mean nothing. It broke. Then it went up. So you know what to make of it. So now it's sitting at 200-day moving average. It went up on 16th of October. Everything went up 3% and up. And now 18th of October came down, and 19th of October is sitting at 200-day moving average. So it's just sitting at 200-day moving average. So for me, I will be watching S&P. So I look at out of 4, there's a Russell I'll show you. So out of 4 market, which one is telling me more clearly where the market is going? Others are giving me confusing signals. So I watch them, but I see which one is giving me the clear signal. So it's the Russell, and S&P is telling me the market can go down further. So this is Russell, broke down on 10th of October, below 200-day, and then further, see how it's coming down. It didn't go up below above 200-day moving average. It means nothing. Again on 15, then on 16, everything magic happened on 16th of October, but magic not enough. So now it's sitting. So 1500. So this is where the Russell bounce back up. So it can bounce from 1500. So for me, I'm watching Russell at 1500, S&P at 2600, 2580. It's right now sitting at support. So it can easily break. So now I know my market condition. I've prepared my watch list. So let me go back to this slide. I showed too many charts. See how busy I was. Okay, so I know market conditions, right? So I know all 4 where they stand. I prepared my watch list. I put it in my watch list on my TradeStation platform. Tomorrow I'll try to find a familiar setup. I will really stock Lululemon and Triple L out of all the stocks because they really look good. I'll show you the charts again. So out of all that, Lululemon and Triple L, they look good. I have already visualized the path, so I know where they're going. I've evaluated my risk to reward ratio for these 2. I know the upside and the downside. If I catch it, I will really feel good about it, and I will pull the trigger. After I pull the trigger, I'll set my exit strategies, both on the upside and downside. And then I'll monitor the trade. I'll take profit or loss, whatever is in my fate. And it doesn't matter if I take profit or I take loss, I'll pat my back because if I followed my rules. If I didn't follow my rules, then I don't curse at myself or don't bang the table or break the monitor. I don't do none of that stuff. So if you take a loss, nobody should even notice that you have taken a loss. That's how cold you should be when you're trading. Not even your dog or cat that you took a loss. And then you update your trading journal, your buy price, your sell price, and the reason for the trade. And if you made a mistake, you write down the mistake, what mistake you made, so and how much it cost you, that mistake. And then at the end, if you believe in God, you give thanks to God that you are alive. So Lululemon and Triple L. So I'll show you Lululemon and Triple L. Okay, so this is Triple L. So I feel good about it because I see it coming down. It can fill the gap here or fall to 200-day moving average. And I feel really good about Lululemon. If it breaks, I will go short right away, and I see the path of 111. So Lululemon and Triple L are the best for me, and it doesn't mean that these are the one, maybe something else, and maybe something, none of these, something else, completely different. I didn't even think about it, and it popped up tomorrow. So last, I showed you the charts of markets, and cancel. I show the chart. Okay, so I have an 8-month coaching program. So this is an advertisement. It's not an advertisement, but something for you. So I have 8 months coaching program. If you're interested in finding out more details, I teach a lot more than this what I showed you. Send me an email and we talk about 75 minutes. What I do and how you will learn from me. You can send an email to me at askus@financialmarketwizard.com, and we talk for 75 minutes and we see if you like it. And the next is, if you're not a swing trade member, then you can take my trial for $27 and for 2 weeks. If you like it, you continue it. If you don't like it, you can always cancel. And the next coaching session will be on November 4th, 5 p.m. Pacific, Sunday. So make a note, November 4th, not next week. I'm out of office next week. On Sunday, I'm out of office. I'm always in office during weekdays. It's just weekend. So next Sunday, there's no webinar, but on November 4th, I will show you more charts. So on November 4th, I don't know what the market will be doing. Based on the market, I'll show you some charts. I may prepare some new topics, and I may show you one of the previous topics. So there's so much material I have. So keep an eye on the email on webinar, and I'll see you on November 4th. Thank you. Bye.